Hi, uh, today my topic is goods and service tax, which is also known as GST. Let's start goods and the service tax GST with the definition. Uh, Definition it says that goods and the services tax is an indirect tax used in India on the supply of goods and services. Before GST, there were so many tax like sales tax, excise tax, VAT, and central state tax. But from 1st July 2017, this all tax were replaced by one tax, which is known as Goods and Services Tax or GST, with the theme One Nation, One Tax. Let me explain you GST with the help of an example. Let us consider a product whose mark price is rupees 1000 and rate of tax is 10%. Now if I want to buy this product, then what is the cost price? So cost price is equals to market price will come over here plus a tax, and its rate is 10%, so it's a 10 percentage of rupees 1000, which is equals to 10 divided by 100 into rupees 1000. Two zeros will get cancelled. 10 into 10 is 100. 100 plus 1000 is equals to rupees 1100. That means rupees 100 is your tax which you need to pay to the government. Now the types of GST. There are three types of GST: CGST, Central GST, SGST, State GST. If the transaction or the sales takes place between a state, instead of state, if it takes place in between union territories, so SGST is replaced by a UGST, which means union territories GST, and last one is a integrated GST. I will explain this all terms one by one later on. So we have three different types of GST: CGST, SGST or UGST, and IGST. Okay, today I am going to discuss something about types of sales. There are two different types of sale. The first one is intrastate sales and another one is interstate sales. Intrastate sales definition: sales of goods and services within the same state or the union territories are called intrastate sales. Let me explain this term with the help of a simple example. Let us consider two persons A and B, and the person A wants to sell its product to a person B, but both of them are from the same state. So this type of sales is known as intra-state sales. In interstate sales, the amount of tax received is divided into two equal parts as CGST and SGST. In the above example, the amount of tax is rupees 100. So in case of interstate, rupees 100 is divided into two equal parts, and one goes to the central government as a CGST and another one goes to the state government as a SGST. Another type of sale is interstate sales. Sales of goods and services outside the state or the union territories are called interstate sale. Let me explain this one also with the help of a simple example. Let us consider a person A in West Bengal and a person B is in Sikkim. Person A wants to sell his product from West Bengal to a person B at Sikkim. So here sales takes place from West Bengal to Sikkim. From West Bengal to Sikkim, that is from one state to another. So this type of sales is known as a interstate sales, and in this type of sales the amount of tax received goes to the central government as a IGST, integrated GST. In our example, rupees 100 is a tax, so this whole amount goes to the central government. IGST is imposed on import of goods and services into India and on exports of goods and services outside the India also. Now let us compare intra-state cells and interstate cells. Intra means within a same state or union territories, whereas interstates mean outside the states and union territories. In case of interstate cells, the amount of tax received is divided into two equal parts. One part goes to the central as a CGST and another part goes to the state as HGST. But in case of interstate cells, the whole amount of tax goes to the central government as IGST. Input and output GST. Let me explain input and output with the help of an example. There is a manufacturer, dealers and a consumer. Manufacturer sells his article at rupees 1000 at the rate of GST 10%. So the tax receipt is 10% of 1000 is equals to rupees 100. Now dealer gives a rupees 200 as profit and sells it to consumer. So now the cost price for a consumer is rupees 1200. Rupees 1200. Tax receipt in the second case is rupees 120. Now with the help of this example, let me explain you what is input and output. Input GST means tax paid by a dealer, in this case which is equals to rupees 100, and output GST means the tax paid by a consumer, in this case which is equals to rupees 100. Amount of tax received in the second case is the differences of output and input, that is rupees 120 minus 100 is equals to 20. That means only rupees 20 is goes to the government as a tax in the second case. So the total amount of tax received by the government is rupees 100 plus 20, so 110.